the Badger, and we know we've been away for oh so long, but we're back with the cryptocurrency and digital blockchain technology podcast. With me is Mr. Johnny Fry.
Good morning, good afternoon, good evening. Good to be back, Badger. Back in the Badger's den.
Yeah. Yep. I had the doors closed for a while, but I opened them back up and I let the sunshine in.
Fantastic. What colour are your claws today, Beth?
They are I'm not allowed to wear fingernail polish anymore. I'm allergic.
Oh, you used to have some real groovy colours though before.
I do, and I can wear like regular fingernail polish for like maybe a week, and then it'll start making the skin, like my cuticles, the skin around the edge of my nail, it'll make it start to itch and I have to take it off. So I just like, nope. Oh well, but my real nails are actually getting quite long. And I don't know. It is what it is. So now I started dyeing my hair. So my hair is actually black and half teal blue now.
Oh my goodness. Have you seen James's hair? James looks super smart. He's got rid of his dreadlocks and he's looking very sharp these days.
Really, Mr. Tiley?
I'm all grown up.
Finally. You only had to get to 70 to grow up.
I put my pants
down.
You grew down. If your hair is blue though, are you Karen the Badger?
Yeah.
What's been going on, Badger, since we were last on the airwaves, hasn't there, James?
Oh, it feels like half a year's gone by.
Yeah, we've seen Bitcoin halving. We've seen we've seen Bitcoin ETF, and really interesting. I must say I hadn't really thought it was such a big deal, but been to 3 or 4 conferences in London and in Europe, and they all go on about it, saying this is the defining moment for digital assets, because this is finally when, if you like, digital assets and the use of blockchain technology for institutions went mainstream. And you sort of think, yeah, really? Well, what got my attention was that 23% of all fund flows, net fund flows for BlackRock, biggest fund manager in the world, 23% were into their Bitcoin ETF. And Fidelity, it was 54%. So it's seen some huge flows, and that's obviously caught the attention. And now we're talking about all sorts of other ETFs, Ethereum and XRP and Solana and Polkadot. So interesting that finally it's sort of caught Main Street's attention. And then you've got this whole plethora of other people talking about tokenization of real estate, tokenization of debt instruments, tokenization of funds, tokenization of private equity. And, Standard Chartered, great big bank, they've turned around and said it could be as much as 30 trillion of token assets by 2030. So all been pretty busy, Badger.
Yeah. So one of the things, and I was at a big memorial for the people for my listeners, they all know, and they've given us an amazing amount of grace. I lost my little brother at on Star Wars Day, May the 4th. And but I was at his memorial last week with a bunch of my family and a bunch of his friends. And you know what? I want you guys to speak to kind of this underbelly of money fear and what's going to happen with the economy and what's different in each neck of the woods. Because I know Northwesterners are a little weird, East Coasters and the South may be a little different. And I know over on the other side of the pond, it is definitely different from here. But people right now, the family members that I were talking to, they're taking their money out of the bank, and they're not buying houses because they're afraid the market's too volatile, and they're just kind of saving their money and hunkering down. What's going on in your guys' neck of the woods?
James, what's it like on the East Coast?
Well, I was going to say I see that. Everybody's taking their money out of the banks, and I stopped my mother recently from, curious about refinancing my house. And I said, whoa, you got like 2.5% interest going on. There is no coming back from there.
Yeah, right.
I'm like, you don't move. But everybody is concerned about unfortunately, we're in an election season, and if anything is proven well for the United States, is that we don't know what we're doing. Like the entire country just does not know what they're doing. So we have no guidance in terms of money. We hear big, popular, smart people like Johnny talk to us about it. It's going to be okay. Everybody's tokenizing, but nobody knows. So over here, it's been about day to day living, price of gas, price of food, a lot of holding your breath and waiting. Like there's still some optimism that come whatever happens. I think we know it'll happen, but whatever happens in November, it'll start to get better. The question is, who's going to help do that? And I think it's what Johnny was alluding to is the ETFs are supposed to play a big deal because in America, in the United States, an exchange traded fund such as VanEck Bitcoin Fund, that means that you got Chrysler over by you, right, in Washington, Daimler Chrysler. We got Hyundai Kia here in Georgia. These automotive union workers are going to be able to have Bitcoin in their retirement and their pension. They may not, they may not even know. They've heard people talk about it.
Yeah.
Their friends might have a wallet on Coinbase, right? And all of a sudden, their employer is going to be like, "Hey, when you check in these boxes, there's the word Bitcoin." That will, I think, that's going to be the path that we take, where when it's from employment to the employers, the regular Joe is going to start to proactively learn about crypto. And
so does that mean that since that is going to become part of your mutual fund or your retirement fund, has that been afforded the same protection as if like on my 401k, if I'm choosing S&P 500? That's the same deal, right?
So BlackRock, for example, correct me if I'm wrong, Johnny, BlackRock created an insured institutional contract with Coinbase. We all know Coinbase. So you and I, we go to Coinbase and they're like, "Hey, not your keys, not your crypto," right? We've said that a lot and we can't stress that enough. But when BlackRock came to Coinbase, they were like, "Hey, all right, I'll tell you what," right? So they have these vaults and they insured the accounts that Coinbase is holding on behalf of BlackRock. And it would be safe to say that you can't trust them any less or any more than you would giving BlackRock your non-tokenized part of your retirement. At the end of the day, they're BlackRock.
Yeah.
Yeah, Beth. Okay. So let's go one step back. And I think that what your friends were saying, this fear, it's really interesting because at one level, I think people are generally quite concerned. I'm not sure if they got to fearfulness, but they are quite concerned, and they're looking and saying, unless I actually was exposed to tech, or unless I was exposed to artificial intelligence, I've actually not done that well over the last few years, really. Stock market's done okay. Here in London, looking at central London property, probably has now gone sideways typically for the last 4 or 5 years. And with the price of property, there's probably not a lot of chance it's going to do a lot more because it's just not that affordable. But if you look at the institutions measure fear or uncertainty. They have something called the fear index, the VIX. And they use that as partly as a pricing mechanism when they're looking at pricing options and futures and things like that. And the VIX today is actually trading, pretty low. It's trading at just over 2.4 as a number, and that number is at the lower end that it's been certainly for the last 5 years. Bear in mind it got in back in March 2020, got up to 66. So it's like 5 times, people with 5 times more uncertainty and concern and fear. So I'd argue at an institutional and investor level, they're saying, don't worry about it. Interest rates are coming down. Inflation's sorted out. We're probably going to have a change of government in the US. We've already had a change of government here in the UK. We've had a change of government in France, in Germany. And those governments are going to want to boost their economies, and things are going to be all okay. And even today, we had our ex-prime minister, a chap called Tony Blair, turn around and say, look, we've got huge amounts of debt. Brits are typically, not that healthy, aging population. But the savior, it's not North Sea oil. The savior is artificial intelligence. It's going to sort all our ills out. It's going to make us much more efficient. It'll all be okay. But I'm not so sure. And you're seeing a lot of money being taken out of the banks. Interesting report from The Economist last week saying that, a number of banks in the US in particular, you've got 5,000 banks. A good chunk of those banks are questionable at best. Last year, American banks lost $580 billion worth of cash. So I kind of understand where, the people you're talking to are worried, and not just worried about cash, but worried about leaving their money in the bank. And I think that's where I think these money market funds are very, very important. Take your money out of, if you like, bank deposits and stick it with professional treasury managers. Stick it with, little old companies like BlackRock, Fidelity, Franklin Templeton. Those companies, you've got now able to put your money in and you can get it back out, at a moment's notice. You don't have to wait 4 or 5 days. And so you've got diversification, but you've still got access.
Yeah, so I think that there's been it's almost a paranoidal fear. Like, I was talking to my Uncle Max, who's one of the most financially savvy people I know. And he's very, very on point, very technically savvy, and he's really kind of paranoid right now. And he even says that. He's like, I'm paranoid. I just pulled everything out. He goes, I'm transferring it into actually physical, coins, gold, silver. He's commoditizing his liquid assets. He's liquidating assets and commoditizing and turning them into a commodity and
Beth,
hiding it.
Well, Beth, you've got we've talked to them about it before. There's a regulated German exchange called Swarm, and they have just issued and created a way for you to invest directly into gold, but in a digital fashion. So the security company Brinks will physically hold the gold here in London, and the German regulated company, so you can go onto Swarm and you can buy, I think it's as little as €1,000 worth of gold, and it's actually backed by a gold bar held by Brinks.
That's awesome.
But it's not just a company. To be fair, most people have not heard of Swarm, but you've all heard of HSBC. HSBC back in March did exactly the same and said to their retail investors in Hong Kong, if you want exposure to gold, rather than physically owning a bar of gold, and it's very heavy to pick up, but B, more importantly, you then got to pay to store it and all the rest of it. You can actually put your money into this non-fungible token, a digital security, a digital asset, and it's going to be backed 1 for 1 with an ounce or a pound or a kilo or whatever amount of gold you want to buy. So people are beginning to sort of look at that and say, well, okay, this is an alternative way to get exposure in that particular case to gold. But I think we're going to see silver coming out like that. But you can trade these things 24 hours a day. You don't have to wait for London to wake up, or the Singapore stock market or New York. These things can be traded 24 hours a day, 7 days a week. And that appeals to certainly people that are a bit more digitally savvy and people that are more sort of engaged with their own portfolios.
So I know that a lot of us, me included, I've been with PayPal forever, ever and ever. Let's talk a little bit, because there's a lot of really cool digital coin stuff going on with PayPal on the Solana blockchain, right?
Yep. So what we're seeing, PayPal, obviously a global payments business. They're not a bank. And the reason I stress that is that historically, payments were conducted by banks. They, and they held the money and they moved money between the different banks. And what was going on there is that one bank had your cash, and then they hypothecated it. They lent it out to other institutions, and therefore $100 from that you'd deposited maybe created like $500-600 worth of loans. Well, what PayPal have done, they've created a US dollar backed stablecoin. So for every dollar you put and give to PayPal, they're going to back it and hold it as a dollar of cash. They're not going to gear it up. It's going to be held. And this is really important because historically, we have been using credit instruments to actually make transactions. So when you go to the bank and you put money in a bank badger, it's no longer your money. It is the bank's money, because they can then go and lend it out to other people. And you hope that they don't go bust, and you hope that you'll get your $100 back. Well, that didn't happen with Silicon Valley Bank, did it? Or Silvergate. But what PayPal is saying, don't trust us. We will just keep your money very, very safe. And what we are doing is creating something called a bearer instrument. It has real value, and you can then potentially move that money directly on a peer-to-peer basis and not rely on another party for the credit rating. Because this PayPal dollar is backed by dollars, and therefore it's very safe and very secure. And because it's in a digital format, then it becomes programmable. So Beth, I will pay you $1,000 if you do 10 adverts on your radio station. And I'll actually pay you $100 for every advert. So every time the advert gets paid, I will have to pay you $100. But you haven't got to wait for it. It'll be programmable. So automatically, a third party would say, did an advert get paid for Johnny? Yes, it did. Fine. Johnny, we're going to debit your account, effectively send that money across. So my $1,000 is locked. And once you've actually done all the adverts, the money is being paid across. So this programmability of money is going to change the way business is carried out.
I like that. I love that.
Well, it's
so
reduce the risk.
But James, we're familiar. Wait a minute. We're familiar with, a lot of business owners are familiar with what we call net 30, net 60.
Net
so 90. What Johnny is describing real-time streaming payments.
Net zero.
Net zero is a good word.
Delivery
payable when you get the invoice.
But Beth, you've been around a while. I know James, and certainly I have. And we've seen many of our sort of people and businesses and friends and family, and businesses have gone bust. Businesses typically do not go bankrupt, don't go into administration because they're not profitable. They go bust because they run out of cash. Now, the city, the institutions, the regulators, whether you're in New York, London, Paris, or wherever, they're saying we want delivery versus payment. I will give you some shares in BNP Paribas. Will you pay for those shares in real time? So that's what as James was just saying there, it's delivery versus payment, but actually it's taking 30 days or 60 days. But if you went to SMEs, small, medium-sized businesses, they account for 95% of all companies in the world. In the UK, I'm sorry, I don't know the States numbers off my head, but in the UK, 62% of people work for a company with less than 50 employees, i.e. an SME. Well, if you went to an SME and said, would you like to be paid once you've done the work, once you've done the service, produced the product, they're almost all going to say, yes, please. I want to get hold of that cash. And once they get hold of that cash, they will then go and do something with it. They won't sit on it. They don't hold it like a big institution will. So if we start seeing delivery versus payment, real-time payments, then what you're going to see is faster economic growth. You're going to see better productivity. You're going to see more tax receipts. So this is a really, really important thing. And digital money, I think, is a good step towards being able for SMEs. So that impacts probably all the listeners to this show and many, many more. This is why the future of money is actually changing.
Yeah. Oh, I agree. And I think AI is going to play a part in that too. Because just like you were saying, okay, after you've played this commercial, then you're going to get a payment. Well, then those companies are going to have AI set up that are listening to whatever, And as soon as they hear that commercial get played, then the AI will notify their database, and their database will send off the payment.
Yep. Yep. But the other thing, Beth, I thought was very interesting is that Robinhood put out some statistics in March and said over the last year, we have been basically allowing our customers in the US to be able to trade outside normal market hours. So, James, what time does the stock market close in New York typically? Is it 4 o'clock or 5 o'clock?
4 o'clock.
4 o'clock. Okay,
but that's 4 o'clock. That's 4 o'clock East Coast time, which is 1 o'clock in the north and over here on the West Coast.
I've always felt bad for my colleagues on the West Coast.
So that means, Beth, you can't buy any stocks and shares in America after 1 o'clock in the afternoon.
That's right. That is correct. It's always been that way.
Let alone when you get home and you've got a bit of time, so you shouldn't really be trading your portfolio during working hours. So what they've done is say, we'll let people trade outside normal market hours. And they actually racked up an incredible 10 billion worth of transactions. So they're and they're saying 25% of that daily is coming outside regular market hours. So the reason I highlight this is because once you've tokenized, once you've digitized, whether it's property, funds, cash, equities, bonds, doesn't really matter what it is. But once you've tokenized it, you can then trade it 24 hours a day, 7 days a week. And we've seen a little experiment by Robinhood to prove there is the demand. People are interested. They want to be able to trade when they want to trade, as opposed to being said, sorry, it's 1 o'clock in California. You can't trade because Wall Street's shut. Well, hang on. I want to buy and sell. No, you've got to wait till tomorrow, or unfortunately, there's a Friday, you've got to wait till Monday before you can do anything.
Yeah, and I think that's gonna, that's a big new change. And I've been doing stocks and stock books since I was a kid. And that used to be the biggest thing with being on the West Coast is because I used to work for Frank Russell, who did the books for the S&P 500. Mm-hmm. And when we had to have our graphics submitted for those stock books, I mean, this was a long time ago, but we used to have everything submitted. Everything ran on East Coast time. And now we see it pushing and pushing and pushing closer to UTC, which is universal. Everything's just going to be 24/7, which I think opens up a whole new world for a lot of people who, some of these kids aren't even up before 1 o'clock in the afternoon.
But then, Beth, we go to the other crazy extreme. And I couldn't believe this because, the US, at the end of the day, it's the most powerful, biggest economy in the world. Yet you seem to have an obsession with writing your signature on bits of paper, using checks. And 54% of Americans wrote a check in the last year.
What?
And 17%
wrote
6
James,
checks.
when was the last time you wrote a check?
Well, there's a lot of you.
I don't even have a checkbook.
I haven't had the bank. When the bank told me, hey, we're going to go to the debit card and you're not going to have to write checks anymore, I literally stopped ordering checks. I hated checks. I hated them.
I will say this. That happened to me. I was at church this past Sunday, and you always see the people, they whip out their checkbooks, right? And they're writing a check. And this one woman has a little carbon copy part, right? So
oh
you
my
write
gosh.
the check, and then the carbon copies it to the other check. And I said to myself, that was a good, I said to myself, when does that line get crossed where someone looks at that person and goes, what is she doing in church? Right? Almost as if it would be an insult because you just wouldn't know what it is.
I'm shocked that that they don't have a little stripe box in the basket, right? Oh, do you want to use your card? Here's
so
the
my
stripe
church
box.
Puts up,
just tap it.
That'll do nicely.
My church puts up a big QR code on the screens up on the walls, and people take their smartphones and they're scanning the QR code, and as far as I know, it's PayPal or Venmo
Yeah.
or whatever. But then you've got the people that are breaking out the carbon copy checkbooks. So you're right there. You're on a cusp right now where Americans are either or.
Yeah, but in I know the date's a little bit long ago, but between 2020 and 2021, so it's but that's the most up-to-date figures we get from the US Department of Treasury. They reckon check fraud cost 24 billion in a year.
Yeah.
So at one stage we're talking about delivery versus payment, instant money, and another way. I don't, James, how long would it take to clear a check in America? 3, 4, 5 days?
3 to 5 days
3 to
when
5
you're
days.
pushing your electric bill.
Yeah. So
Well, yeah, you can't kite anymore.
So one
That
stage we
used to
got a
be
lot
a
of,
big thing.
but so you're right, Beth. We got a lot of fear, a lot of uncertainty. We've got we've got all sorts of actual armed conflict. Whether it's in Ukraine or the Yemen or the Sudan. There's a lot of oil price is high. Oil price is not good. High oil price is not good for the US economy. Very, very exposed to price of oil. But fundamentally, a lot of the prices, real estate, equities, a lot of them they're not cheap. And
Yeah.
if we see that flood of money post COVID, we talked about this a few months ago where M1, which is a measure of the amount of cash in society, it went from about 3.7 trillion to at one stage $21.5 trillion in America. And then it's tailed off to about 15 and a half, 16 currently. And because what people have done is exactly what you're saying. They've taken money out of the banks, they've bought certificates of deposit, they've put it in money market funds, or they've just stuck it in a tin under the bed. And that's what 85% of all cash in circulation in Nigeria did when they tried to denominate, change the currency. Because there was only one, every 100,000 people in Nigeria only had 4 banks to go to. And so they said, well, I'm not going to use the banking system. I'm just going to go out to cash. And in a funny way, what PayPal are doing, saying, well, we don't need to use banks. We could actually just have a digital form of money that's programmable 100% by cash. I don't have to rely on whether the banks have made good or bad decisions and will I get paid back, because we've seen how not all banks necessarily are that strong. And therefore, I want to be more certain as to my hard-earned cash. Will it actually deliver when I need to?
Yeah. And PayPal, people trust PayPal. PayPal has been around forever. People have been using PayPal. I remember when you couldn't buy anything on eBay unless you had a PayPal account.
Yeah. Well, Beth, look out for the next one, because he's been talking about it for years. Our friend, Mr. Musk. And he's always talked about creating a super app. And now he's changed Twitter to X. He's always been obsessed with having X Pay. And I think that you'll see in the next year, 18 months tops, him coming out with some form of digital US dollar backed payment mechanism. And so if you want to make payments, then you can do that using his super app. So I think we're going to see more and more companies like PayPal coming out with alternative forms of way to make transactions, but those transactions can be made in real time 24/7. So you're right. The future of money is definitely changing.
Oh, yeah, absolutely. But you're going to have to get Grandma Bender, who's still writing checks and using the carbon copy paper, to be okay with using them.
Well, it's not going to happen overnight, is it?
No. I mean, it's never going to.
They still use checks, but some, without being ageist, but I can remember certainly 20 years ago, my parents, didn't want to buy anything online. Oh no, you don't want to give your bank details online. Now people don't even think about it.
No, I mean, no, and I think that there's been a growth, and I'm not being ageist because I know some elderly people who are very tech savvy, and I think that there are, but I also know some young people who are not tech savvy at all.
Well, they're not tech savvy, but even more worrying, they're not financially savvy. They think if a 20% APR is, I don't have to pay it till the 20th of April. No, it's the annual percentage rate. And we don't teach finance in school or college. And unfortunately, a lot of the baby boomers, they are financially illiterate. And that's not a good thing.
I think that one of the things we did with our kids is I used to sit my kids down when I did bills, and I would have them sit down with me, and I would be like, this is for this, and this is for this, and this is for this, and this is the calendar that we have that we do it on. And
You
my
took their
kids,
pocket money and you got them to pay for the gas bill.
that's right. You want Captain Crunch, you got to kick in.
Captain Crunch.
I was actually
You-
taught this in high school.
So I had an economics class in high school, and they taught us everything.
Yeah, we had to memorize our social security number. We played the stock market game where we picked stocks out of the New York Times. And yeah, you had a balanced checkbook, do taxes. I think all that's
but
gone
they
now.
don't have economics in school anymore. When I was in high school, we had economics, and we also had JA, which was junior administrators, and we had to open our own business and run it.
That's not the same as J Lo?
No.
Oh.
It's not a butt. There's no junk
it's-
in that trunk.
Today it's J-Lo.
But
Well,
we had
Badger, I'm
JA,
gonna-
junior
Badger, I'm gonna have to go.
administrators.
It's getting dark here. I'm going to have to go. I know you've got
Oh.
to scurry off, but let's get back online in the next couple of weeks and do another little update like we used to.
Oh,
So
yeah,
remind
absolutely.
the listeners that they could send in. Remember, they used to send in questions.
Oh, cool.
They
Yeah.
can, and we're going to start pushing that a little bit more. And also, we have an app, so they can actually just upload their questions onto the app. But we'll talk more about that later. Johnny's got to run, and I actually have to run too. I've got to go put on my super suit and get to work.
Excellent. Well, look, send us some questions. You can find us. Beth, you're on LinkedIn, aren't you?
Yes, we are.
Okay. And
All
James,
three of us are on LinkedIn, actually.
absolutely. Well, James Tiley, I know he's on LinkedIn, and my name's Johnny Fry. I'm on LinkedIn. Just reach out, send us your questions, or send them to Beth because she puts it all together, and we'll do our best to answer your questions and give you some insight what's happening on both sides of the pond. But thank you for listening.
And thank you very much for listening. This has been a cryptocurrency blockchain technology podcast with me, Beth the Badger Clemens, and Johnny Fry and James Ty Lee. Have a great day.